Hello, thank you so much for tuning in to Morning Markets. Markets today are taking comfort in the read that we got of inflation south of the border. It did accelerate a little bit, but it is the smallest back-to-back acceleration that we've seen since before the pandemic. And at 3.2%, it still has a 3 handle. Core inflation was a little bit more stubborn, but it did come down a tick, still sitting at a lofty 4.7%. That is above where the Federal Reserve would like to see it. Now, nevertheless, the market is pricing in the fact that the Fed is unlikely to increase interest rates come September. Let's bring in Claudia Sahm, former U.S. Federal Reserve economist and founder of Sahm Consulting. Claudia, thank you so much for being with us. The market's interpretation is this is not enough to move the Fed off the sidelines. How are you thinking about it?
I think the data today with the consumer price index and the employment report that we got recently, they're both good news, right? In terms of the economy is rebalancing. At this point, the Fed, they've done a lot already and done it very quickly. And they watch the data. They've got 2 more big reports, another CPI, another employment report before they vote. But today, the summer of disinflation continues. This is good news.
Are we headed towards outright deflation? This is something that many people aren't thinking about, but when you look at what's going on in China, could that be an ultimate reality, especially if there is a bit more of a pronounced slowdown?
Right. I think there are some sectors like gasoline, food, sometimes shelter that move a lot. And so it is possible that they, for a short period of time, actually go into deflation where their prices are falling. We are far from that. And we have a lot of room to make up. Even though inflation is slowing, the level of prices is still very high relative to before the pandemic.
You had created a very elegant in its simplicity indicator for a recession that says when the 3-month moving average of national unemployment moves up by 0.5%, that typically is an early indicator that we are heading towards a recession. When you look at that indicator now, what is it telling you about where the U.S. economy is headed?
So we're in a good place, particularly when we look at the labor market. That indicator, it's about unemployment. And when it triggers, we are already in a recession, like 2 to 3 months. That's been the historical relationship. This is not a law of nature. This is just a pattern that has been very accurate over time. And if you look at the labor market, you can confidently say the United States is not in a recession.
Have you applied that to other economies outside of the United States? I saw one of our economists here in Canada quoting the Sahm rule when and applying it to Canada, putting a little bit of a higher threshold, a 0.7% increase, but suggesting that maybe things in Canada don't look so hot when you apply your rule.
Right. You can apply it to different countries. It makes total sense. Canada is 0.6, United States is 0.5. Those numbers are about matching a pattern in the past. And there are some countries, say Germany, that really holds down the unemployment rate. The Sahm rule is not going to work there. So it's really just a pattern. It's a way of thinking about an unemployment. So I have seen it show up in other countries. I've seen it show up in the United States in states, regional areas.
When looking at certain components of inflation, especially recently, you've seen this big surge in energy prices, whether it's oil, whether it's natural gas. Food inflation has been particularly stubborn. How do you think about how that evolves and start to show up? And could that show up in a more meaningful way in headline inflation?
Right. There's a reason that the Federal Reserve, when looking at inflation, kind of sets food and energy aside. It's not because these don't matter to people. It's just that they tend to move a lot. And something like energy, you're moving into a space where geopolitics, not just economics, matter. So it's going to be complicated. But as you said, what's happening in China with their economy, that has a big effect on the global economy. But what OPEC is doing also has an effect. So it's very tricky. And I wouldn't want to try and forecast energy prices because I think there's so many factors right now that could move it around.